after-hour session highs here on Apple at 4.6%. For more reaction, let's get to Loup Ventures founder and fast money friend Gene Munster. Gene, your initial take here.
Once they got to give credit to Apple, they proved once again the critics wrong. You just go down the line, whether it's revenue, China, profitability, wearables, the guidance, all kind of ahead of expectations. And I want to put a finer point on the guidance. If you take a typical beat, it implies that they'll grow revenue by 2% in the September quarter. That will be the first time in 3 quarters or 4 quarters, the first time in a year that they will have grown revenue. But it's beyond the September quarter. The real tell here is if we start to fast forward into December, the comps, of course, get much easier. And so I think that this is going to be a turning point to the stock, given how easy it gets for the first 3 quarters of next year and separately 5G coming. It just seems to be clear sailing. And I suspect there's going to be a lot of analysts who are going to be wringing their hands over what's the proper multiple for Apple. And this multiple will continue to inch higher in the year to come.
Well, we were just talking about that, Gene, as well. I mean, Tim was pointing out if you do a blended multiple, and you take the hardware multiple, the services multiple, what do you come up with?
So I think a reasonable multiple would be somewhere between 20 and 25 times. So let's pick that midpoint. That's
as a blended,
for the whole thing?
as a blended,
as an overall multiple, and I'm basing that on if you just think about what the sustainable growth is with the buyback. You should have a growth similar to where Google's growth ultimately is going to be. That's kind of a similar multiple to what Google trades at. Also, you can throw other staple companies. If you think of Apple as just a consumer staple, think about companies like Coca-Cola. I realize that that is far outside what a typical tech investor thinks about. But that trades, that's a declining business that trades at a similar type of low 20s multiple. I don't think it's a stretch. And we'll have a camp that will preach religiously that this multiple cannot break out of 15 times. But unfortunately, if you look at the roadmap for the next several quarters, I'll put a stake in the ground here and say it's going to get easier for Apple for the next, call it, 6 quarters.
I think that's an interesting comparison to Coca-Cola. I'm sure there are many people out there, though, who would say and argue that Coke shouldn't be at the multiple it's trading at right now and should be lower. But putting that aside, Gene, as we enter the conference call period, what are the outstanding questions on your mind?
Well, I think I would want to learn more about why they guided up. Again, that 2% guide up was in the face of a tough comp. The comp in September of 2018 was plus 20%. And so I'd want to get a better understanding and specifically about some of the changes that they've made in China. China was one of the big positive surprises, down 4% year over year versus down 20% in the March quarter. And Josh Lipton's interview with them, Tim Cook talked about some of the changes that they made with the trade-in policy. I want to think about what the sustainability with that is, and ultimately think about how the company is going to navigate what potentially could be a small but risk nonetheless in terms of the regulatory environment, and lastly, how they're thinking about 5G.